So we are from Voltec Electric, and this is the detailed view of our implementation cost. So for our capital expenditure, um, first we need to allocate 300,000 euros for our buildings, 16.6 thousand euros for our machinery and all the equipments that we use, 50,000 for our furniture and fixture of the building and office and labs. We also need 35,000 euros for our operational vehicle, in this case two vans, and we also need 10,000 euros for renovation and furnishing the company. In total, this is we need 411,550 euros. Our working capital for the first 2 months includes the marketing for 40,800 euros, and operation and production costs us 347 euros, and the administration costs 3,000 euros. In total, this all add up to 390,800 euros. We also have other expenditure, such as the registration of our business that costs us roughly 1,000 euros, insurance 3,000 euros, road tax for our vehicles, operational vehicles for 800 euros, and all the other stuff for 700 euros. In total, this is 5,500 euros. We also need our deposits for our utilities, that includes telephone, water, electricity bills for 700 euros. In total, all of this adds up to 808,550 euros. For our source of fund, we are 5 people, 5 co-founder of this company, and each of us pitch in 100,000 euros. In total, it's 500,000, and we also, on top of that, we also loan some money from the bank for the total of 1,500,000 euros. So for the cash flow of our first year in 2020, first, for the inflow, we got the owner's capital that we pitch in from each of the co-founder. In total, that this is 500,000 euros, and also we loan some money from the bank starting in March. In total, that is 1.5 million euros. For the second quarter of 2020, we started our pre-order of the product, so we also got cash inflow for this period. And for the next 2 quarters, we already released the product, and that is this figure here is our sales income. So in total, our inflow is 3.5 million euros for the first year. And our outflow in this category in this year uh, consists of the research and development of our product, and the R&D that we allocate for 15,000 euros per month starting in January until the expected launch date of our product in June. And also our marketing that we allocate, um, we started recruiting in April, so and we also start the pre-order in April, so we need to allocate the marketing team by this time. um, for this we budget our expenses to 20,400 euros per month all the way until the end of the year. We also have some entertainment budget that we expected to use, such as for barbecue and for the team bonding for our company, um, by the end of each by the end of the semester. So this we allocate for 500 euros per for twice a year. um, for our operative expenditure, we have our budget of production that starts in August, and our overhead starting in April is 5,950 euros per month, and the salaries also starts in April of 52,000 euros. Our capital expenditure includes the building for 300,000 euros, machine and equipment that we use for developing our product, and research also cost us 16,600 euros. Our furniture and fixture for our building, lab, and offices cost us 50,000 euros. Our operational vehicles, in this case 2 pieces of caravan shipping vans, cost us 35,000 euros, and the renovation of our building cost us 10,000 euros. Other expenditures that we have includes the deposit for 700 euros. So in total, the outflow for the first year is 1,200,012 and 650 euros, and we have a surplus of 2,287,350 euros, and the balance of our cash for this year is 1,875,050 euros. So by the end of the year, we have a cash balance of 4,162,400 euros in total.
So this is our company cash flow for the year 2021. So the cash inflow we've got is from sales. On January 2021, we will get 200,000 euro, and this money will increases every month, and we've got the peak in August and September, which is 417,000 euro. Uh, on the last quarter, it will decrease to 375,000 euro. The total sales we've got is 3,937,500 euro. And for the cash flow, we have a R&D budget. We will research and develop a new product from the last quarter of the year. For each month, we will spend about 15,000 euro. For the marketing, we will spend 20,400 euro each month. And we will also have an entertainment break and barbecue party for in our company uh, in June and December for 500 euro. For our production budget, the first quarter and the fourth quarter we will spend 138,833 euros, and the second and the third quarter we will spend 200,000 and 250 euros. For the overhead, we will spend 5,950 euros. It includes utilities, payroll, travel, and other stuff. And the salaries and wages we will give to our officer and officer is 52,000 each month. And we will start our loan repayment from the March, and we will only pay for the basic incentive because we were in the grace period for 2 years, or 24 months. So we will spend for 12,500 euro each month starting from March 2021. And the capital expenditure, like building, machine equipment, furniture and fixtures, fund renovation, and we will not buy another building machine equipment, so there's no expenses from that. And so the total cash outflow we've got this year is from R&D budget, marketing, entertainment, production budget, overhead, salaries, wages, and also bank repayment. The total is 303,193,700. So we will have a surplus in year 2021 is 743,800 euro. So if we see from the last year, we've got 4,162,400 euro, and at the end of the 2021 we have 5,650,000 euro. Therefore we can assume that this year we have a surplus about 1,500,000 euro. So this is the cash flow for the year 2022. Like the last year, we get the cash inflow only from sales, and in the first quarter the sales is 250,000, and it will increases, and the peak of the sales is in July, August, and September, which is 541,666 until 667. And like last year, the in the last quarter the sales decreases to 458,333, and the total sales is 4,781,250 euros. And we will for the cash outflow, we will have a budget to have a research and development. It will end in June, so this year we will spend about 75,000 euro to do research and development of our product. And then for the marketing, like last year, we will have the same budget, which is 20,400 euros each month. Like last year also, we have the entertainment in June and December, which has the same amount of money. And then next is the production budget. In the first and the fourth quarter, we have the budget of, we will spend 208,250 in each month, and this in the third in the second and third quarter, we will spend 312,375 euro each month. The overhead is still the same because we assume that there's nothing change. So each month we will pay for 5,950 euro, and we will there is also salaries and wages, which is 52,000 each month. And the bank loan repayment is 12,500 euro each month. And we still want to buy a building, machine equipment, furniture, fixtures, fan, and renovation in this month. So there is no cash outflow in that capital expenditure. So the total cash outflow in this year is 4,289,950 euro. And so from the cash outflow and the cash inflow, we can see that the cash inflow is bigger than the cash outflow. So this year we have a surplus of 491,300 euro. Like last year, in the beginning of the year we will have some deficit, but in the after we have deficit we will have surplus. And from last year we have 650,000 euro, and the ending of the year 2022 we have 6,632,600 euro. This means that in this year we have a surplus of 149,300 euros.
Now we're coming to the cash flow of 2023, starting from cash inflow from the sales starting at January, from 312,500. It is stagnant for the first period until it goes to the second period, which increases into around 790,000, and then it decreases again at the third quarter into just only 125,000, and then it increases again in a significant jump into 1,040,000, with a total at the end of the year for around 6,812,500 euros. And then that is the total cash inflow, by the way. And then for the cash outflow, we started research and development. The R&D budget in this year we don't have any because we don't develop anything yet, just because we have already released the newer versions. And then for the marketing expenditure, as we can see here in the marketing, starting in the January, 20,400 euros, and it's goes the same until December. And for entertainment, we have entertainment break for all our staffs in June and December with the same exact amount of 500 euros, resulting in 1,000 euros this year. Operations and administrative expenditure, we have production budget, which starts in January at 381,700 ish for the first period, increases in the second period into 485,000, and then in the third period from July to September, it's still the same as the second period, but in the fourth period from October to December, it decreases again into 381,000 euros, because the demand in the second and third period is usually higher, as there are more technological events and releases in those two periods that are happening. So our production budget total in 2023 is 5,206,000 euros. For the overheads, we have same exact amount for 12 months, which is 5,950 euros. And for salaries is also stagnant values for 52,000 euros, with a total of 624,000 euros for the year of 2023. And for the bank loan repayment, we are finishing our grace period for the past 2 years, and it ends on February 2023. That's why our first 2 months we pay only for 12,500 euros, and then for the rest of the month we pay full for the loan, of course already divided, so we pay starting from March 87,500 euros till the end of the year. So we have a total of bank loan repayment 900,000 euros. And then for building, machine equipment, furniture, fan, and renovation, we don't spend any in this year. So as we can see here, the total cash outflows is for January and February, it's 472,000 euros, and then in March we have increase in total cash outflows for 547,000 euros, and then for April, May, June, July, August until September, we have 651,000 euros, and then for the fourth period, the last 3 months, is around 547,000 euros, with a total outflow of 2023 7,047,000 euros. And then we can see the cash surplus or deficit. We have unfortunately deficit in the first 3 months, as we can see, 160,000 euros for the first 2 months, and then 235,000 euros in the third month. But we have a surplus for the second period for the value of 139,400 euros. But then we have also deficit again in the third period for 526,000 euros, around that. And then we can overcome the deficit by having the surplus at the last month, which is 494,000 euros. But by adding this yearly cash surplus or deficit, we have a total of deficit 235,000 euros. The beginning cash balance from last year, we have 6,632,000 euros, and then it increases in the second month, decreases in the third month until the fourth month, and then increases again into the seventh month, which is July, for 6,496,000 euros. And then we, by doing this calculation with cash surplus and deficit, we have quite a decrease until October, resulting in 4,916,000 euros. But we have quite an increase in the last 2 months, with a total of we can see the increase at November, 5,400,000 euros, and then circa 5,900,000 euros in December, ending this 2023 with a cash balance of 6,397,000 is the total of the beginning cash balance of this 2023. And then for the ending cash balance, as we can see in the table, we have the final total in 2023 for 6,162,000. Because of the deficit, we have a decrease in the ending cash balance compared to the beginning cash balance. And then for the income statement, we conclude only year 2021, 2022, and 2023. As seen in the table, the sales is increasing exponentially each year, with the first year 3,900,000 euros, around that, and for the second year for 4,780,000 euros, and then for the third year for 90,800,000 euros. The cost of the sales is, for the 2021 we used up 20 million euros. For the second year it's 30,100,000 euros, and then for the third year is 5,200,000 euros. So the gross profit for each year, we have 2021 in 1,855,000 euros of profit. Year 2 is not as much as the year 1,658,000 euros, and for the third year we have quite a good profit with the amount of 4,600,000 euros. And then we see here also the calculation for operating expenses. We have marketing expenses with the same value each year, 284,800 euros. Administrative expenses increases each year. The first year is 720,000 euros, the second year is 792,000 euros, and then the third year 872,000 euros. The depreciation expenses with 4,740 euros each year. And then for other things included 1,000 euros per year. That concludes in operating expenses of around 1 million each year, but it's not exactly 1 million. 2021 is 1,010,000 euros. Second year is 1,082,000 euros. The third year 1,162,000 euros. The operating income is the gross profit minus the total of the operating expenses, and as has been calculated here, the operating income for the 2021 is results in the value of 844,000 euros. The second year is 575,000 euros. The third year is 3,443,000 euros. We also calculate the financing expenses, but with no higher purchase interest, so only interest on term loan from the bank loan. For the first year and the second year, these are the grace periods. The first year is only 125,000 euros. The second year is 150,000 euros, and the third year we have to pay fully for the bank loan, so we have to pay 900,000 euros. So the net profit before tax that has been calculated here by subtracting operating income and the total of financing expenses, we have the first year we have a net profit of a bit around 700,000 euros, and then the second year is 425,000 euros, and then the third year we have quite good net profit, 2,543,000 euros. For the balance sheet, we create the balance sheet starting from our research year, the 2020 until the 2023. We start from the non-current assets book value, the building value, which is not decreasing as in here. It's on 300,000 euros each year. Machinery and equipment, because of the depreciation, starting from 16,600 euros, decreasing until year 2023 until into only 5,000 euros. Furniture also decreases in value from 50,000 euros in 2020 down into 1,000 euros in year 2023. Vehicles also, because the selling point of vehicles always decrease each year because of the depreciation value. The depreciation value, the vehicles starting from 35,000 euros in 2020, ending in 2023 by value of 26,600 euros. The deposit, we only deposit for the utilities in 2020 for 700 euros. So we have non-current assets for each year here. 2020 is for 412,300 euros. 2021 is 390,800 euros. 2022 370,900 euros, and then year 2023 352 and 600 euros. The current assets, inventory of the finished goods, it has been calculated here by from having the finished goods but it's still kept in our inventory. For the first year we don't sell anything, fully 2,000 units is in our inventory, so we have finished goods for the amount value of 600,000 euros. For the year 2021 only about 20% kept in the inventory, so we have a total of 600,000 euros valued finished goods, and then in 2022 we have 900,000 euros. 2023 we have 1,500,000 euros. The cash, we have the cash of 250,000 ish in 2020. We have the cash of 2021 for around 925,000 euros. In 2022 we have 1,475,000 euros, and for 2023 we have 1,725,000 euros. We have a total current assets. For year 2020, 850,000 euros. Year 2021, 1,525,000 euros. Year 2022 we have 2,375,000 euros, and 2023 as the highest one is the 3,225,000 euros. So we have a total assets from the current assets and non-current assets combined for each year. We have in 2020 1,262,000 euros, around that. 2021 for around 1,900,000 euros. For year 2022 a bit below 2,750,000 euros. For year 2023 we have 3,577,000 euros. And owner's equity, the capital, we sum the total of the money we compile from the 5 of us. We have 500,000 euros for the very first year to kickstart our company, and then we don't share any other value in the rest of the year. So we don't have accumulated profit in 2020 because we don't sell anything. 2021 we have accumulated profit from our pre-orders and selling, 699,000 euros. For year 2022 we have 425,000 euros, and then for 2023 we have profit of 2,393,000 euros. And then you can see the total of the owner's equity there. For long-term liabilities we only have bank loan. So the bank loan starts from 2021, which is grace period still. 2022 is also grace period, at 125,000 in 2021 and 150,000 in 2022. Starting in 2023 we have to pay, as I said before, we have to pay fully now for the bank loan repayment. So it concludes in 1,050,000 euros. And we have also other liabilities. These current liabilities, accounts payable, we have starting from 2020 we have 100,000 euros. 2021 120,000 euros. 2022 we have 130,000 euros, and year 2023 we have 200,000 euros. So from all these calculations we get total owner's equity and liabilities in year 2020 with a total of 1,262,000 and 650 euros. For 2021 we have 1,916,150 euros. 2022 we have 2,746,250 euros, and in year 2023 3,577,950 euros.
So I'm gonna explain our liquidity ratios. We can like see it in like two different ratios, which is the current ratio and the quick ratio. So for the current ratio, we wanna see how our ability to like pay off our short-term installations, our short-term debts, usually within a year. So like because we have a loan from a bank, so we need to know if we can pay it or not, pay it back or not. And we can see that from the table, every year we have a lot of assets, and for a liability that low, we get our current ratio is at least 8.5, which is good because it means that in case of like a very bad situation, an emergency maybe, and we need to like pay off our liabilities directly, we can like uh, give our assets to cover for it. And the difference between current ratio and quick ratio is that for quick ratio, we only calculate our most liquid assets, so we don't include inventories in the calculation. So if we subtract our inventories from our current assets, it is still way above our current liabilities. Therefore, it means that we are in a safe spot. We can always pay our liabilities. And for the efficiency ratio, we look at our inventory turnover. We don't use the amount of goods, but we use the cost of sales, and we divide that by our average inventory value. And we can see from each year, for the first year to the third year, the number is always rising, and we do like 3 to 5 inventory turnovers per year, which is, well, it can be good or bad, but it shows that maybe we can be more efficient with our production. Maybe we can up our production so that we don't have that much turnover each year. But at least the number is not below 1, because if it's below 1, it means that we are not selling enough of our inventory. Therefore, we think we are in a good spot. And for the profitability ratios, we'll be looking at 3 ratios, which is the net profit margin, the return on assets, and return on equity. So for our net profit margin, we want to see like for every euro we made, approximately how much can we keep for our company, how much is like the profit. And as we can see, at the second year it's not really that good because it drops from the first year, but we are still making money, which is good. And our net profit margin is 0.178, 0.089, and 0.259 in the first 3 years. For our return on assets, it's looking at how much money we made from our like invested assets, and we can see that in the second year it's not that good because we are continuing to invest more assets, but our net profit is actually lower than our first year. But by the third year, we can see that it rises significantly, and our return on assets would be 0.711, which is really good. So yeah. And for the return on equity, because our equity only comes from our income, so they are all always the same. And for the solvency ratios, we will be comparing our debt to equity and our debt to assets ratio. So debt to equity is a way for us to measure like how much is our company relying on our on the debt to like gain equity. And as we can see, the ratios are 0.35, 0.66, and 0.52 per year, which is good, which means that we are using our debts. We are using our debts in the right way. We are not having too much debt, but we still stand to gain a profit from them. And our debts to asset ratio is looking at how significant is the debts we made, the loans we made, for us to be able to maintain and maybe invest our assets in the company. And as we can see, the number is very low, 0.13, 0.1, and 0.35, which is very good because it means that we rely more on our equity than on our debt for maintaining our assets. And this means that our company is, we have what we may consider like a really healthy financial health.
So we got, for this part of the presentation, we gonna know the risk that we gonna face in the future for our company. We can identify 5 of the risks for our company. The first one is to increase if the company suddenly have an increase in material and labor costs. The next thing is not enough initial exposure to gain attraction from the people. the sales target not achievable, a sudden technological leap, and also we cannot secure a manufacturing deal. That is the 5 risks that we think about. Within those 5 risks, we're gonna evaluate it and also divide it into the impact and likeliness that the risk is gonna affect us as a company. We divided not enough initial exposure is the high impact and high likeliness to impact our company. Increase in material and labor cost is the low impact for our company, but it likeliness to face that problem. And we divided the sales target not achieved, sudden technological leap, and also cannot secure manufacturing deals as a high impact but low in likeliness. So it probably had a big impact for our company, but it's very low chances that the risk will come to face our company. And the last is our contingency plan, which is the backup solution for the risk. For the increased material, we gonna find another vendor that match our expectation expenses, so the math work out. For not enough initial exposure, we're gonna increase our marketing budget, increase the number of endorsement, increase the number of public places partnership, and increase the number of advertisement. For the sales, if the sales is not achievable, we're gonna reduce the production for the next period, so we have a lower standard so we can achieve it. For the sudden technical leap, we have an immediately revise the upcoming product to be more technologically advanced so we can keep up with the trend. And the last, if we cannot secure our manufacturing deal, we're gonna increase the manufacturing budget so we can divide manufacturing across the multiple companies. That is all for our presentation. Thank you for listening.